Thank you for tuning into the All Funds Network podcast. My name is Mike Schroeder. Today we're here with my co-host Styler Steinke, and we're also joined by John Sharon of Richey May. John, thanks for the time today. We're gonna this is part of our short series for those that are watching, where we're covering everything that a new fund manager needs to go through. So audit, tax, legal, and then this one is taxes. So John, really appreciate you joining us today, man.
Yeah, absolutely. My pleasure.
Great. Excellent.
This episode is brought to you by our friends at Richey May. Richey May provides audit and tax services for alternative investment funds. You could find the link to their website and contact information below in the description. Now back to the episode. Well, maybe to kick it off, why don't you give us a quick introduction to Richey May, what you guys do, and then let's talk about taxes at a sky high level from there.
Sure. Yeah. Typically, if you get into too much depth in taxes, it starts to get boring and puts people to sleep. So it's really good to keep it high level. But yeah, so Richey May, we're a top 100 firm. Typically, we're a very niched firm. Historically, we've been very focused on financial services, but we've added many other types of components. But then specifically where I come in is I lead our alternative investment tax practice. And we also have an alternative investment audit practice where within that practice, we focus specifically on funds. So private equity, crypto, hedge funds, fund of funds, everything kind of within that realm. And then also a piece that does work for the management companies, GP, and individual returns for some of our fund managers.
That's great. That's awesome. Well, that's probably a good segue to kind of step in and talk about the starting point. When do you kind of come into the process from tax perspective, and who do you work with? Maybe it's a starting point there, John.
Yeah, so it depends on the client. Some clients really like to be hand-holding and involved with everything, but a lot of clients really like the fact that we're able to get a lot of our information from fund administrators. So we work really closely with the fund administrators. We have a lot of really good fund administrator relationships out there. And also our audit team does as well. And so where that kind of comes into kind of works together is our audit team, if they're auditing the fund that we're also doing tax work on, they're going to request information from the fund administrator. We're also going to request some additional information. And a lot of that work comes and gets done behind the scenes so that the client can do what they do best, which is generally trading or something along those lines. And then we get the client involved when we have questions or things that they need to answer that maybe can't be answered by the fund administrator.
Got it. Very cool. And I on that note, maybe one other thing to quickly elaborate on for funds, which I assume a lot of times it's the management company, the GPs, and then I guess you also have to do funds or taxes for the LPs, like K1s and whatnot. Is that correct?
Yeah, exactly. So while we don't directly work with the LPs, we're preparing K1s for the LPs. And so our clients are the funds, but we always know that it's really important to fund managers to keep their clients happy, which are the LPs. And so a lot of the process that we go through is to get that information, prepare the K1s, and try to get them out in a timely manner based upon the timing of information so that the LPs can use that information for filing their taxes, extensions, or whatever they need to do with that.
Yeah. So I can, with that, what you mentioned, John, obviously working with the fund admin, and I suppose it's similarly on the audit side, the admin's going to prepare the financial statement draft with the notes, getting that process started early on in the year. Like right now, January 2026, we're starting in the throes of those conversations, right, to get that data, the content, the information, the numbers over to you guys to get that done. What does that timing look like from a tax process perspective? Where do you kind of see that happening?
Yeah, so we like to get in as soon as we can when the books are ready. There's sometimes a little bit of a pause on how quickly we jump in just because we like to wait for the auditors to take a look and work with the fund admin and just make sure that they don't anticipate any changes. And so that can be different sign off. It's really easy if we're auditing because we sit next to the auditors, right? So they can tell us, hey, this one's good to go. You're ready to roll with tax. But we work with many other audit firms as well, where they audit and we do the tax and just develop those relationships. But yeah, so they tell us, hey, this is good to go, and then we're full speed ahead on the K1s. But there is definitely pre-work we can do. We can start looking through transactions and try to figure out what we need to do to make adjustments while we're waiting for other information like 1099s and other things to come through.
I guess maybe an important element to mention too, these are from a fund perspective, these are most likely LLCs or LPs, or this is partnership accounting, right? For
Yes.
the most part. And
Yep.
you have the fund level, you're dealing with the fund's tax work as well as the underlying LPs, which are the K1s, right?
Yeah. So part of the fund tax work is producing those K1s and then, getting them to the LPs so that they can do their tax work.
Right. So I guess from the high level fund portfolio perspective, when is the due date for getting the funds tax work done versus the investors? Maybe you can talk about that at a high level.
So technically, partnership return is due March 15th, but just reality is because of timing of everything, most partnerships are going to extend to September 15th. So with that said, there's no necessarily need that those K1s have to be done prior to April 15th or March 15th or among other timelines. But from a practical matter, most investors want to be able to either extend or file on time. And so our goal for most funds is March 31st to try to get K1s out. Many can come sooner, and some go right up against that, or some go after if they're the types that can go what we call during season. And usually it's going to be ones that are audited during season for the gap audit, right? Or most of the audit work is done during season because that regulation deadline's often April 30th, depending on SEC or state or other factors. But then there's also 1099s that may come in February, some come in March. And so really the K1 process, I would say February 15th through March 31st is when the majority of the K1s we're going to issue. But then you got K1s that wait on PTPs or MLPs, or wait on, if it's a fund to fund, it's waiting on underlying K1s. Private equity, if it's waiting on portfolio company K1s. Oftentimes those get extended and go anytime during the summer, and some as late as September, just depending on the timing of the information.
That's good to know. Yeah. So for some different fund types, there might be a longer wait just because it's almost like a train. You gotta take your turn. Yeah, you gotta wait for the next one.
Exactly.
With when let's say you're talking to a new fund manager, when somebody like comes to you initially, what are some of the things they should be thinking about as they're launching their fund from a tax perspective?
Yeah, I think it's really important that they get us involved as they're making those launching decisions, especially with structuring. I think one of the things I find sometimes is a fund gets structured, they're working with their attorneys to structure, and attorneys do a great job with it. But then sometimes there's nuances that a tax person's going to think of, or throw into audit to an audit person might think of that maybe wasn't thought of during the original structuring process. So I always strongly suggest that they get tax involved as they're structuring or finalizing the structure when they can. Because if they have a foreign investor, do they need to have a blocker if they weren't planning on it? If they're going to produce UBTI, do they need to have a blocker for tax exempt? So there's various things there, but I think a lot of it is if you can get us involved before something happens, then we can help to help you make good decisions.
I guess in terms of like structuring, you're suggesting like when they are putting together, maybe they're offering documents with like the legal side, right?
Yeah, exactly. And we can walk through, and we do this with many of our clients. Some say, hey, look, I'm not ready to do a full master feeder. And so we'll say, look, you don't have to do it all at once, but you can eventually get there. Here's why you would want to do that. If you're going to get capital from this type of investor, you might need this type of piece in your structure. And we can go through that with people. And it's important to do and understand up front.
Yeah, and that's a great point, John. Thinking with the end in mind, right? Eventually, they're going to even have one, having that even carved out of the docs, even if you don't do it now.
Right.
Have that flexibility later to turn that on to open up the floodgates for the investors that maybe are in Cayman or Cayman feed or BVI or whatever they're doing from an offshore perspective.
Exactly.
What other from as you're speaking to fund managers, are there anything that you would say that they're missing, or the mistakes that they make early on that you would say that they should be aware of?
Yeah, I think it's just, honestly, it really goes back again to that communication. It's just understanding what your fund is doing, right? And asking, okay, what does this mean from a tax perspective? I think usually where fund managers run into issues is if, let's say that somebody opens up a private equity fund and they invest in a portfolio company that operates in 40 states, right? To them, it looks like, oh, I'm investing in a LLC that we think is going to give us a good return, right? And then they get a K1 that has 40 states, and the fund has to file in 40 states, and their investors have to file in 40 states, right? A lot of times that can be avoided, or at least understood prior to that happening. as a surprise if that communication happens beforehand. And there's others examples of that if you're investing in foreign entities or other things. But really, I'd say it's just communication and talking through what do you have. And if you're making a big transaction, just ask us. It might be, hey, yeah, this is easy. That's not going to do anything, and it's not going to cause any problems. Or it might be, oh, we really need to talk about this.
I guess as we think about that from an investor point of view, as we're talking to fund managers here, John, one element it would be relative to digital assets, where investors are, investing in kind, not in U.S. dollars, but in crypto.
Yep.
There obviously are issues or elements to think about when tracking cost basis, things like that. Can you talk a little bit about that?
Definitely, and that's a great question because it comes up quite a bit, and I think there's common, I don't know if misconceptions are the right word, but just right. If you think of digital assets, right, they're often called digital currency. Well, people view them as currency. It's like, oh, why can't I give you currency, right? And if it's stable coins, totally fine. I mean, the difference between your cost basis and fair value is negligible because they're pegged, right? But if you're, say, if somebody goes in and says, all right, I want to invest with 1 million Bitcoin and my cost base is 100,000. And so they go to a fund manager to do that, right? They have $900,000 of unrealized gain in there. The responsibility for the fund manager is to get the original cost basis and holding period of each lot of that. Let's just say it's 10 Bitcoin, right? And if they bought that Bitcoin or mined the Bitcoin and got it over multiple different periods of time, it could be quite a few different pieces to it and layers of information that the fund is responsible for tracking. And then I'd say additionally, the other thing that a lot of fund managers need to consider is what are they going to do with that Bitcoin? If they're going to use the Bitcoin and go and say, all right, I want to go buy XYZ token with it. Well, they're going to create a realized event for that LP that contributed the Bitcoin who maybe thought, oh, I'm going to get deferral on my $900,000, right? So they need to have a plan on, okay, is this going to be something that we're going to sell or change for another asset? Or is this something, do we need to borrow against it to go try to do something different to where maybe we're not realizing it? So they just need to have a plan and know in advance. And lastly, I would just say, how many partners are you going to let contribute in kind? Because many times we'll see, all right, we're taking a $50,000 check here and I'm $2 million there, and they're letting everybody contribute in kind. And the administrative burden of tracking all of that and staying on top of it can be really cumbersome. So I often suggest is, consider the LPs that are giving you big checks. And if the check's big enough, it's worth the administrative cost.
This is good, actually. One kind of follow-up question for that, John. If, when I transfer my crypto from Coinbase to a cold storage wallet, it's not considered a taxable event. If you transfer your crypto from whatever Coinbase to a fund, is that considered a taxable event, or is that still the same as just a transfer?
So I'm going to use the fun answer of it depends. It really does. There's a lot of factors, right? There's some rules related to investment company, if those rules apply or not for diversification. There's rules related to just so many different things related to it, right? The rules are much easier when it comes to traditional assets because they're very well defined.
I think it makes sense. I appreciate you taking us there. We'll keep it high level for this. People reach out to John if you have this going on. Learn this ahead of time.
Exactly. That's one of the situations where communication in advance before doing it is really important.
Yeah, like you said, John, just everybody's situation potentially can be different. So understanding the nuance in their specific situation is definitely helpful for sure.
Exactly.
Is there anything else, like other common issues that you might come across that, whether it's crypto or any other type of fund that?
Yeah. I guess I've harped on the communication. I think it's really just really about that. Understanding your investors, right? Is what are your investor needs? What's going to come through to them? Getting a good understanding of what your K1 is going to look like for the investors. And then I'd say another one that's really important that's often forgotten, or actually sometimes it's not even forgotten. The GP says, "Oh, I'll just let the taxable income to myself just come and it'll be fine. I just need to get the LPs first." And then usually they get the K1, it's got a lot of taxable income on it, and then flags start, going up as why am I getting so much tax? So I'd say, for a GP, just ask questions and understand how your fund is going to tax you in advance so that you're not surprised. Because there's times where a lot of times where there's no cash available, but you're getting taxable income, and that happens very commonly and can be a frustrating experience if you don't know it's coming.
Yeah, that makes sense. I guess to that point too, speaking about taxes relative to the fund, do you, I mean, obviously on the audit side, there's kind of a valuation methodology conversation. Is there a tax policy for the fund in certain cases? Because certain nuances can be different across type of strategy and investors. I was just curious.
Yeah, I mean, and maybe not exactly an official policy, but there's certainly going to be positions that are taken on a tax return. And so there might be certain trades or types of transactions that you're doing that may be esoteric or not within the norm or not well defined. Like crypto, many things are still not well defined, right? A lot of us are using what we think is the best method based upon rules and laws and regulations for other types of investments. And so there's gray. So I would say it's more of just understanding, yeah, what's that position that's going to be taken on a specific thing, different items that your fund will produce.
Yeah. So to that point, it could be treated as property, it could be treated as security,
Right.
depending on the nuance and the strategy of the fund, it could change, right?
Right, exactly. And ultimately the position is up to the fund manager, is they're taking the position. Now tax preparers have to get comfortable with the position to be able to sign off on it, but it's also our job to help them understand, okay, here's the different positions that people are taking in those gray areas. Here's some risks associated with it. And unfortunately, we can't give you a crystal ball or all inclusive, but here's some things to consider and then help them make a choice on how they want to take a position on it.
Cool. Well, John, this is good. I think this is a good spot to wrap up. Appreciate you walking us through this. Just like every other service provider, it's best to talk to John, talk to your tax provider in advance before you go too far down the rabbit hole. So, John, thanks so much for your time. Where could people go to connect with you and learn more about Richey May?
Yeah, absolutely. My pleasure. And yeah, you can go to our website. My email is actually pretty simple. It's jon@richeymay.com. I got one of the old ones before everything else went in. But yeah, you can just contact one of our alternative investment team members, or if you know somebody that works with us and want to get a direct referral, then I'm sure they can help you connect as well.
Awesome. Well, this has been great, John. I appreciate your insight and education here. And we'll make sure to include all your info in the show notes.
Thank you once again to our friends at Richey May for sponsoring this episode. If you're starting a fund, you need an auditor. Make sure to give our friends at Richey May a call and tell them we sent you.